traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. 24th day of July 2015, and this is the Daily Report for Gold and Silver. So traders, as we close out this week in trading, we currently do have gold trading higher on the day. We're looking at spot gold. Has traded to a low of 77.40. So for the better part of overseas last night, plus this morning, we had the market down. There is a short covering rally, I believe, that is going on. Market currently trading roughly at 1098, 1099 in that area. Puts it up around $9. That would be basis the spot market. When we look, of course, at COMEX Gold, which is just getting ready to close, you've got the market sitting same place, 98.10, but your net change is about $4 higher on the day. It's simply where they're fixing the open at. Now, when we look at the week in gold, as well as the day, there's no doubt about it. We had a tremendous sell-off this week. And if we look at this weekly chart, that's what I've just pulled up. This candlestick here represents the week in trading. So you can see prior week, we get our close and it opens just at and below that particular price point and really never looked bad. It came in, it made that low at around 77. Today, we had a lower low, I believe, 71 for the week. And we now have this market popping back up, but still trading under 1100. And to me, that's an important thing that we want to watch. Now, in terms of dollar strength or weakness, the dollar right now is up on the day, but ever so slightly. In fact, it's only taking away about 80 cents worth of value in gold. The other $9, and we'll go, the other $9, of course, is genuine trading, whether it's short covering, bargain hunting. The market has received a lot of buy orders as we go into the close on this week. So traders, no doubt we are seeing a nice little rally considering where the market's been since this morning. And what I'm doing is I'm going to highlight our daily chart that we're looking at. Of course, on Monday, we had one of the most brutal sell-offs, I believe, in the last 2 years. This was the most dynamic market sell-off that we have seen over the last 2 years. Then we had a really, really light uptick day, followed by 2 down days, light also. And then, of course, yesterday, going in overseas, we had the market trading to this low here. This is 77. And you can see that it's currently trading, as I said, around 98.73 is the current print, but between 98 and 99 on the day itself. So traders, as we move into the close of this afternoon and this week, a couple of things we can definitely glean out of the information that is becoming available to us. First of all, the fact of the matter is the market is backing off of 1100, trading right now at about 1096, 1097 really in that area. And when we look at the market, of course, an effective close above 1100 to me says something, because that's a real possibility that we'll see the market form some sort of a base, although we did hit that earlier this week only to back off. When we look at some of the charts, and I'm pulling up a daily chart, this is in Japanese average format, we want to really determine the strength of the trend. The trend has obviously been down, there's no doubt about that, but when we look at these last couple of days on our daily chart, we absolutely have an absence of upper wicks. And what that means, of course, is that at no time during the trading day did gold trade above the midpoint of the prior candle, in this case, the prior day. So that is one thing that I believe is a fairly bullish signal. And then the second thing you look for is body size. Now, when we look at this body size, of course, on Monday, that's when we had the largest drawdown that we've experienced in 2 years in terms of the price of gold dropping dramatically. So relative to this body size, none of these match up. They're not very small body, but they are certainly diminishing in size. which tells us that the trend is not picking up steam. It still has steam, but nonetheless is not as dynamic as we saw at the beginning of the week. And that's absolutely to be expected when you consider the kind of activity we saw on Monday. Now, however, when we move over to our weekly chart, now this is a standard candlestick chart, it really gives us an idea of what we saw over the week. We are, as I said, we are closing up on the day. We're closing below 1100, so it seems. This candle here represents our weekend trading. Very, very huge range when you consider what 1130, 1135 on the top and 1070 on the bottom. You've had the $60 range. So a tremendous range. Most of that range, of course, was given up on Monday with that big drop. However, the market, at least for the week, is trading definitively lower. We are short gold right now, roughly at 91, so about $6 below this price point. As long as we're closing above 1100, I believe it's still effectively trading within the range. We could absolutely see this market trade lower on Monday. However, we want to be cautious when we take a look at the fact that you do have some short covering going on. And when we look at our daily chart, that's this. You can see how well it really popped off of the lows. And that's telling us that at least tentatively, we do have some support in the market. So traders, when we take a look at silver today, it's currently trading in essence unchanged, up roughly a cent and a half at 14.66. We did hit that low in terms of this week's low, really at around 14.50, and that was our target. My sense is that when we look at this particular chart, this is our weekly chart, realize that there's been a absolute dichotomy or a difference between what we've been seeing in gold and what we've been seeing in silver. Compare this to the dramatic down week that we saw in gold. When you look at this particular market, it looks like it's closing about mid-range in terms of the range of the week, well below 15, but above 1450, and 1450 is really my earmarked level that you'd want to see for support. We have not taken any active positions in silver, and I'm going to take a look next week to see how it's reacting, because it has had more bullish qualities than gold has in terms of when the market has been selling off and when the market has been moving up. Today, of course, is slightly an exception where we do have a pretty big short covering rally going on in gold. And as you can see, we just saw a red print in the market. So it's flirting with unchanged, little bit lower, little bit higher on the day. And that's kind of what I see in terms of the trend. It is not clearly defined as of yet. And it is, I believe, attempting to find some sort of bottom here, but has been unable to do that. I'm certainly not as bearish on silver as I am on gold. And my belief with gold, all things being equal, is that we could still see a fairly dramatic price drop next week. We've got those lows at around 70. We've got major support and historical data that takes us to 65 and 41. 65 and 41, those are the lows back in 2010. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for another daily update review. Bye-bye.